Welcome back. According to the International Monetary Fund, IMF, Russia's invasion of Ukraine has delivered a further huge negative shock to sub-Saharan Africa, driving food and energy prices higher and putting the most vulnerable people at risk of hunger. To discuss this, we have Matt Kindiger, Practice Lead Sub-Saharan Africa at Frontier View. Matt, great to speak to you.
Hi, thanks for having me on the program today.
So, Matt, it's quite a bleak picture we have here. Which countries across Africa are most vulnerable to surge in inflation this year?
So certainly it's worth noting that we are going to see an increase in the inflation rate in pretty much every country in Africa this year, especially in sub-Saharan Africa. And most countries will see inflation reach a multi-year high. So this is a problem that is shared by pretty much every market in the region. But there are countries that are particularly vulnerable to global or increases in global food and energy prices. And those are countries that are very dependent on imported energy for their energy needs. Also those that are very dependent on Russia and Ukraine for some of their food imports, as well as countries with weaker public finances. So the countries that we have identified as the ones that are likely to see the most significant increases in inflation over the next year or so include Ghana. We're expecting inflation to average around about 20% this year. This is a significant increase from last year's rate. Nigeria is also forecast to see an annual average inflation rate of above 20%. And quite interestingly, Côte d'Ivoire is likely to see inflation rise above 6% this year. And although that sounds quite low in the current context, this is actually the highest rate that the inflation rate in the country will be since 2011. Côte d'Ivoire has usually had very low inflation, but it does import quite large proportions of its food from Russia and Ukraine, so it is particularly vulnerable. We are going to see much softer increases in inflation in many other markets. So South Africa will probably see an increase in inflation this year, but it will probably only be to about 7.5%. On an annual average basis. And this is because the country is quite insulated from the effects of much higher food and fuel prices globally, because the rand is expected to continue to appreciate because of very strong export revenues from its commodities. So even though we will see higher inflation there, the country is actually quite insulated from what's going on globally.
So how long is this high inflation environment expected to last?
The impact of this high inflation environment, or the impact of high global cost pressures, will be felt later, or the full effect will be felt later in Africa compared to regions like Europe. So we've already seen inflation reach multi-decade highs in Europe. We're going to see this pass through, or the effects to be felt a lot later in sub-Saharan Africa, especially. So we are already beginning to see headline inflation rise in the region. But we're probably going to see inflation rates spike in the second half of the year, so in H2, probably even in the fourth quarter of this year. And this is because the pass-through effects take a lot longer to be felt in these markets. Inflationary pressures will certainly remain acute in Africa in 2023. We're not expecting to see a meaningful deceleration in inflation, especially in the first quarter or maybe even the first half of 2023. And this is because our base case view here at Frontier View is that global commodity prices and agriculture prices are likely to remain elevated well into the first half of 2023. And in fact, we could see further increases in oil prices, agriculture commodity prices over the next 6 to 12 months. And we're probably unlikely to see declines or even stabilizations in these prices until the end of 2023 or 2024. So the main takeaway is that we're going to see double-digit inflation persist in markets like Ghana, Zambia, Nigeria, Angola, and Ethiopia, and inflation will remain at multi-year highs for the foreseeable future for most of Africa's economies.
So how do you expect government policies to respond to this rise in inflation?
So what we've seen across the world is governments trying to limit the impact of higher inflationary pressures on consumers and businesses. So, for example, in Europe and in many parts of North Africa in particular, we're seeing extended food subsidies on particular food staples, subsidies for energy, for example. But in sub-Saharan Africa, especially, most governments are quite limited in terms of what they can do from a subsidy and price control perspective. And this is because they're still dealing with the impact on their fiscal positions of COVID-19. So they simply don't have the fiscal capacity to implement very broad subsidies to contain inflation. But we are beginning to see some measures introduced. For example, South Africa over the last couple of weeks has suspended some duties on fuel. So it's trying to stabilize the price of fuel. And this is particularly important for South Africa because consumers are very vulnerable to higher fuel prices. In most other African countries, we're probably going to see some kind of reduction or temporary suspension of import duties on food. We could also see some softening of value-added tax rates or a suspension of the collection of value-added tax, for example, for some countries. We're also probably going to see monetary policy in some markets tighten quite significantly in an attempt to bring down inflation. So, for example, the South African Reserve Bank is likely to continue to increase interest rates over the next couple of months, especially if we do see inflation really overshoot the 6% upper target that it has over the next couple of months. The central bank in Kenya is also likely to raise interest rates. We're probably going to see some more interest rate hikes in Ghana as well as a result of much higher inflation. So we're probably going to see a combination of fairly light tax and spending policies to combat inflation, but probably slightly more aggressive interest rate increases over the next couple of months.
Thank you so much, March. I'm sure you'll be keeping track of that, and we'll keep our audiences informed. Thank you so much for coming on the program. It's always good to have you. Thanks for the insights.
Thanks.